Hello and welcome to Philippine Market Podcast. This show brings you weekly updates on the Philippine and Southeast Asian economies with easy-to-digest insights for new and seasoned investors alike. Here's your weekly market summary for Friday, November 28, 2024. In this episode, we'll cover two key developments. 1. The Philippine stock market climbing back above the 6,000. 2. And the Bangko Sentral Pilipinas (BSP) releasing its latest inflation outlook for November. Philippine stock regained 6,000. Let's start with the stock market. On Friday, November 28, the Philippine Stock Exchange Index, or PSEi, closed at 6,022.24, up by 53.11 points or 0.89% from the previous session. This marks a solid return above the key psychological level of 6,000. The rally came after S&P Global Rating reaffirmed the country's investment grade rating and kept its outlook at positive. For context, S&P is one of the world's top credit rating agencies, and its outlook plays a major role in influencing investors' confidence. A positive outlook means that country has a higher chance of getting an upgrade in the future, signaling strong economics and fiscal fundamentals. Mr. Michael Rickford, chief economist at RCBC, noted that it reflects international trust in the Philippine economy. Now, looking at sectors, mining and oils led the gain with a strong 4% surge. Holding firms, financials, and industrials also posted healthy gains. Services remained flat, while property saw only moderate. Among the most actively traded stocks, BDO rose by 2.0% to 131 pesos. Ayala Corporation jumped to 475, up to 3.26%. Converge ICT surged by 4.56% to 1560. Trading volume remained stable with a daily turnover at around 5.5 billion pesos, about same as the previous day. While the market is not seeing explosive activity yet, this week's rebound hints at a renewed appetite for risk. BSP forecasts November inflation at 1.1% to 1.9%. Now, let's move on to inflation. The Bangko Sentral Pilipinas, or BSP, released its inflation forecast for November 2025, placing it within the range of 1.1% to 1.9%. That compares to actual rate of 1.7 in October, so the trend remains fairly flat or even slightly lower. This is relatively low by emerging market standards, and in many ways it reflects price stability. However, the BSP did highlight several upside risks, including higher price of fish, rice, and fruits, mostly due to supply disruptions for recent typhoons, rising electricity and oil price, and the weakened Philippine pesos, which increased import costs. At the same time, meat and vegetable prices are falling, which could help keep overall inflation under control. The BSP emphasized its commitment a data-driven approach to monetary policy, saying it will continue monitoring domestic and global developments. For context, the BSP's official inflation target is 2 to 4%. So, a rate below this range may give them more room to adjust interest rates if needed in the coming months. But for now, the central bank is not signaling any immediate changes, neither rate cuts nor hikes, choosing instead to remain cautious. This week shows a contrast between strong market momentum and cautious macroeconomic signals. On one hand, the credit outlook boost from S&P has clearly helped investor sentiment. On the other, the uncertain inflation path and external risks, such as oil price and currency volatility, means we need to stay alert. For investors, it's important to take a step back and look at the broader picture even when the headlines are positive. Some key reminders: diversify across sectors, keep an eye on currency and inflation trends, be mindful potential volatility as we move into December and year-end trading. Don't let short-term rallies cloud your long-term strategy. That wraps up this week's episode of the Philippine Market Wrap podcast. If you found this update useful, be sure to follow and share this podcast. We are also available on Spotify, YouTube, and Note, bringing you fresh insights every week from the heart of Southeast Asia. Thanks for tuning in, and see you again next time. Salamat kayo, amping.